Hey everybody, how are my traders doing this morning? Our strategy builder is quite large, it's complex, and I wanted to go step by step how to use it. In this video, I wanted to touch upon the initial trade parameters and teach you how this section works. So let's dive in and show you what's going on. We have a few settings, and anytime you don't know what a setting might do, just mouse over it, let it highlight, and it should tell you. Let's just discuss a few of them. So the first one is a calculate, take profit, stop loss, break even, DCAs from a specific point. Typically, the way the system works is when you enter into a position, it takes the average entry price and it calculates off of that price all of your stops, your take profits, all of your limit orders, everything gets calculated off that average entry depending on how it's set up. This gives you the option to choose between the average entry, which is default, or close price. When you're on close price, it doesn't calculate from where you enter, it calculates from where the last bar closed. In fast-moving markets, the close price of the last bar and the open price where you're hoping to enter at, right? Because a lot of your back tests and everything end up basically calculating right from where your new bar is opening at, which is typically where your last bar closed at. And so what ends up happening in fast-moving markets, or especially if you're doing a lot of manual trading, even automated trading, depending on internet speed and all sorts of other things, you'll actually end up getting in at a different price. Instead of being at the price the candle opens at, sometimes you end up 20, 40 ticks higher or lower or whatever it might be, because the market's moving fast, your internet connection speed, other things that are just based on reality. If you're doing manual, your reaction speed, all of that. So what this does is allows you to get closer to the reality you're back testing. When getting those take profits or stop losses, they may be a bit bigger or smaller depending on where you entered, but it'll match your back test results as far as what you know is a typical profit zone. For example, if your back test shows 100 TP is a really good value, right? It hits often, it has a really high win rate, but it might be that you're trading right at New York Open or sometime right after where the markets may be moving fast. It might be news related, something else. And although the back tests show you're winning great and those numbers are great, in reality, when you're entering, you may enter at a different location. The close price will just calculate your take profit and your stop loss based off where the last candle actually closed rather than where you entered. So you're still getting that 100 tick take profit location as your TP rather than 100 ticks past where you actually entered, which may not actually ever happen. And so this gives you a better handle on realistic results. And I think the close price, and you will see even a back test that it's not always exact. It does try to give you somewhat of a realistic result, but the close price gives you probably the closest to reality, and especially in fast-moving markets. So you can play around with that and see how that works for you. But that's basically the reason that's built that way, is so you can mimic realistic results rather than just average entries in faster moving markets. The second option here is calculate opening range. And so for this, when you're doing opening range strategies, it allows you to decide whether or not you want to calculate it off the high and the low. So the highest price and the lowest price, or the highest and lowest opens and closes. And that basically it takes either with the wick values or just the body values. And so high and low is with the wicks, the entire candle, and the open close is just the body values. And so you can choose between that. The trade direction lets you decide if you want trades in both directions, long and short, or you can choose just long or just short. So you can create strategies that are just one or the other. And the nice thing about that is, for example, if you want to have two very similar strategies, but one built specifically for long trading and one for short trading in the exact same strategy type. Say you had an opening range strategy and you build one for when you're taking longs, and you build another one just for when you're taking shorts, and you can build it out a little bit better, customize it better specifically for that variation. And then we've got alternating trades. This lets you alternate between a long trade and a short trade. If you're doing reversals, hitting different limits on different sides of something, maybe like a Bollinger Band, and you're literally only wanting to take it when it hits the top, and you only want a short, then you want to only take longs, then a short, a long, short, and only in that way. So you don't want to take multiple of the same at the same time. Basically, it forces the system to go one after the other. Once you've taken a short, it'll wait for a long. It won't take another short. Even if there's 2-3 different signals in a row for a short, it'll only take the first short, and then it's going to wait for the first signal for a long. And that's basically it. Now, there is the option for alternating long short trades with reset. First, it forces a long, then a short, then a long, then a short. The reset variation is where, say you want to set it up where it's long, short, but if a short hits, so you get a signal for it, but you don't want to take it for whatever reason, it'll basically reset and still allow you to take the next long. So it could be long, but only if a short signal occurred first. Long trade, then a short signal occurred, you didn't take it, and then a long signal occurs, and it'll take it. So it will do multiple in a row, only as long as a opposite signal occurred first, though. Trade is opposite. So this is really simple. If you get a long signal, it'll trade it as a short signal. If you get a short signal, it'll trade it as a long signal. Either one's an option. If you have a strategy that does really well on longs and does really bad on shorts, you can try to trade it as the opposites. For example, longs do really well, right? Shorts do really bad. So you're like, okay, let's trade shorts as longs. And so what that'll do is it'll continue trading longs as longs, but then every time you get a short signal, it'll trade it as a long signal. And so you'll basically be only trading longs in that strategy. Even though you're getting short signals, it'll make them a long signal. It does work sometimes. There's variations. If you want to trade a certain direction, no matter what, you can configure it that way. At open, it'll trade in that specific direction no matter what. You can do that for whatever reason. You have a bias or whatever it might be. But anyway, it's a simple filter. It lets you choose if you want to go a different direction. Then you have your initial position size, how many contracts you want. That's defaulted to 1. You have your initial profit target. That's defaulted to 50. And your initial stop loss, and that's defaulted to 50. And for the initial take profit and stop loss, these two, I want you to consider them as the maximum for your take profit or stop loss. Once it hits that number, you want to be out. You'll see later in other videos how the other variations of settings work, where you can modify those values in real time. It calculates it and modifies them in real time for you in the automated system. But what I'm saying is the initial targets should always be considered as your maximums. For example, here's a chart happening now. If you want your maximum to be 100 ticks, you're telling the strategy at 100 ticks, if nothing else, no events occur, if no other special calculations happen, if I've got the most basic setup, right? If nothing else interferes with this system, with what's happening in real time, and everything is going as planned, I want my target profit to be 100 ticks. That's it. No higher than that. I want to be out at 100 ticks, period. Or same with the stop loss. So that is your maximum value for it. And so always consider your initial targets, your maximum values. And you'll see later exactly why, but just think of it that way, your max value, and you'll be okay. So for your initial trade parameters, you've got the way it calculates your targets, the way you calculate your opening range, trade directions, alternating trades, if you want to trade as opposites, your position size, and your initial profit and stop loss. That's how we set up that portion of the builder. You can always come back and play with it. This is your starting point. This is just the idea of, okay, this is where I want to start and see if I can build something off of that. That's exactly what that's for. And the entire builder is defaulted to basically nothing is applied other than your target profit, stop loss, and entry type defaulted to a fractals break. Other than that, if you look at any of our settings, it's a very basic system. So even like our time parameters is just set to New York Open Eastern time. And it's just everything is set to 0 so that nothing gets affected until you have actually changed the settings yourself. So you don't have to worry about like disabling certain features or something, because really nothing is enabled from the start. Everything is disabled. You got one contract, take profit and stop loss are 50 ticks, and you've got your entry type and your session time from the New York Open. That's it. Load the strategy builder, select an instrument, press run, and you have something running. There shouldn't be any errors, there shouldn't be any issues. You're gonna get something running as long as you choose an instrument. You literally have to do nothing else. But that said, it doesn't mean you're going to have a successful backtest. It just means that the system runs without issues. You don't get errors or things not running or anything like that. So it's set up so you get an initial run as soon as you enable it. Just make sure you select an instrument and you should be good to go. Actually, we can just do that right now. For example, if I want MNQ, I'll just select this week, and we've got the 5th here. So for example, all I did, again, we didn't change anything. We just loaded this up. We changed the instrument. I just updated this so we get a quick run. Press run. This is a 5-day backtest. And there you go. So your backtests work immediately. You don't have any strange errors or issues or strange stuff happening. And this will show you right here. You got total trades, 28 trades, 115, lost 13. And this is based off of the most base initial trade parameters and entry type. We haven't updated any of the indicators with any of the filters provided. We haven't done any kind of dynamic things. We haven't done anything really. And that it's set up so from the start, you're getting a strategy that runs without issues. You don't worry about something not running. From there, tweak here, tweak there, see what's going on, check the charts, where trades happen, see why you lost in certain areas. This is how I create strategies. I read the charts, I see the price action, what's happening in the charts, what's going on, why is it that at certain times I'm getting wins and certain times losses, and what does that mean for me overall. There's a lot you can take from that. That's basically it. That's the initial trade parameters. Simple and to the point. Thank you for joining us. If you have questions, put them in the comments. I'll respond. We'll see you for the next section. You can learn one by one how they work and what they're based off of and what they do. And then you can always leave comments and we'll let you know. And if you're in our Discord, you just ask in Discord and we'll get you answers. Thank you for joining us.